Hey everyone, welcome back to Corporate Decoder, the place where we, unlike some companies we analyze, try to make things clear. Today we're diving into Tandy Leather Factory's latest annual report, and let me tell you, it's a story of a company trying to stitch itself back together after a few rough years. They're in the business of leather, tools, and all things leather crafting, so let's see if they can craft a comeback. First, let's get a feel for who Tandy Leather is. They are one of the biggest retailers focused on leather and leather crafting supplies. Think of them as the go-to shop for hobbyists, small business owners, and anyone looking to work with leather. What they say sets them apart is their brand name, their stores where people learn the craft, and a heritage going back over 100 years. Their retail footprint is important, with 91 stores in the US, 9 in Canada, and 1 lonely store in Spain. These aren't your fancy mall locations. They tend to be in more industrial areas where rent is cheaper. Tandy's strategy focuses on the stores to keep them relevant as places for learning, getting advice, and connecting with other leather workers. Their website helps them to sell goods to consumers, particularly in international areas where it may be difficult to visit one of their stores. They also have a commercial division aimed at businesses. A key part of their plan is managing costs carefully and trying to boost sales by making the most of their stores. They want employees to be more knowledgeable and friendly, improve classes and community events, and upgrade equipment in the stores. Of course, no company is without its challenges. When we get to the risk factors section, it starts to paint a more complete picture. One significant risk is their global supply chain. They source materials from all over the world, so things like price increases, shipping delays, and political instability in other countries can really throw a wrench in their operations. War, terrorism, and unforeseen public health crises are also things they note. Another major risk is the price of leather itself. It's a raw material that can fluctuate wildly, so if the cost of leather goes up, Tandy either has to raise prices or take a hit to its profits. Also, their headquarters is moving, as referenced in the SEC filing document. That creates disruption and risk to their business as they are in the process of setting up a temporary fulfillment center. They are also subject to a number of long-term leases that are hard to cancel. This could cause issues if a store location becomes unprofitable. The retail industry is competitive, which could result in a reduction of prices and loss of market share. With the rise of online retailers like Amazon, it's getting easier for customers to shop around for the best deals, and Tandy has to compete with that. Tandy Leather is one of the most recognized brand names in our industry. If we are unable to provide quality products and exceptional customer service to our customers, including education, our brand name may be impaired, which could adversely affect our operating results. The effects of the COVID-19 pandemic has mostly receded. While we are better prepared to handle a future pandemic, it could impact our ability to keep our stores open, to obtain merchandise or payment terms from our vendors, to transport merchandise to and from our warehouse, to operate our warehouse, factory, and other facilities that require on-site activities, and thus materially adversely affect our revenues, earnings, liquidity, and cash flows. Like any modern business, Tandy also faces cybersecurity risks. They handle sensitive customer and employee information, so a data breach could be a major headache. The company has some preventative steps they have taken and procedures in the event of a breach. Now let's get to the numbers. Sales decreased a bit from the previous year. That said, management blames ongoing weakness in consumer demand tied to discretionary spending. Their cost of goods sold actually increased, so their gross profit declined. Operating expenses overall were up slightly, driven by a mix of higher full-time labor costs and increased occupancy expenses, offset by reduction in accrued bonus. Their effective tax rate was up. The board seems to have confidence as they have renewed the program to repurchase the company's own common stock, which is a move that is in line with increasing investor sentiment. Zooming in on the cash flow statement, cash flow from operations was pretty much flat compared to the previous year. They've got a credit line with JP Morgan Chase but haven't tapped into it. It's good to have that available if needed. The value of their inventory, how much is still unsold, is determined using a first-in, first-out system, and management continually asks if it needs to be written down in the balance sheet. They say they might be unable to sustain their past financial performance or growth. The document discusses the impact of competition and reduced store traffic and whether the business will be able to maintain its brand image. They are also facing risks as a result of the potential of cybersecurity, with the board of directors overseeing management's cybersecurity strategy. The document notes that it is a voluntary filer. Janet Carr, Chief Executive Officer since 2018, is no longer with the company and was replaced January 6, 2025. Net income was only $0.8 million, significantly down from $3.8 million the previous year. Weaver and Tidwell LLP served as Tandy Leather Factory, Inc.'s auditor since 2003. Inventory is stated at the lower of first in, first out, FIFO, cost, or net realizable value, and FIFO layers are maintained at the location level. Finished goods held for sale includes the cost of merchandise purchases, the costs to bring the merchandise to our Texas distribution center, warehousing and handling expenditures, and distributing and delivering merchandise to our stores. Assembled inventory, including raw materials and work in process, is valued on a FIFO basis using full absorption accounting, which includes material, labor, and other applicable assembly overhead. Carrying values of inventory are analyzed, and to the extent that the cost of inventory exceeds the net realizable value, provisions are made to reduce the carrying amount of the inventory. Report of independent registered public accounting firm. The company made an inventory balance of approximately $37.9 million and cost of sales of approximately $31.0 million as of, and for the year ended December 31, 2023. Whitley Penn LLP served as the company's auditor since 2024. Subsidiaries include the Leather Factory, LPA Texas Limited Partnership, Tandy Leather Company, LPA Texas Limited Partnership, the Leather Factory of Canada, Limited, a Canadian corporation, and Tandy Leather Factory España, SL, a Spanish corporation. The company's corporate headquarters and distribution facilities in Fort Worth, Texas, for a gross sale of $26.5 million. The company hired Johan Hedberg as its new Chief Executive Officer as of January 6, 2025. Prior to the hiring of Mr. Hedberg, Janet Carr resigned as Chief Executive Officer, effective January 3, 2025. She intends to remain employed by the company to assist with transition until March 31, 2025. So, what's my take on all of this? Is Tandy Leather ready to ride off into the sunset as a strong leather brand, or are they just patching holes in an old saddle? On one hand, they've got that brand recognition, which counts for a lot. The commitment by the board to repurchase company stocks also signifies confidence in the company, but the numbers don't lie. Sales are down, profit is way down, and they're facing a bunch of risks from global supply chains to competition from the internet, and also the effects of another pandemic. Their future success really hinges on how well they manage those risks and how effectively they can make their stores relevant. While their debt levels raise some concern, I think they have the business model in place to remain relevant, but that relevance is dependent on managing costs and mitigating the impacts of competition. That's all for today's Corporate Decoder Report. Thanks for watching. If you enjoyed, please subscribe, like, and comment.